All right, welcome back to a Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy. Thank you very much for tuning us in. It's the 26th of April, all day today, and 8:16 Central Time. Let's get after it and see what your markets did overnight. Let's start with corn. What has that got in store for us? That's got a little bit of a loss. We're hanging around that unchanged level. Just a quarter cent lower in May, 440 and 3/4. This is doing nothing. I mean, I don't even. A quarter cent lower in May, 440 and 3/4. We're unchanged in September, 461 and 3/4, and new crop down a half to 475 and 3/4. That's corn overnight. How about the beans overnight? Well, they're about a 4-cent loss. 4 1/4 cents lower in the May to 1158 and a half. And we've got a Novi new crop down 2 3/4 cents to 1172 and 3/4 as both of those contracts try to get to $5 and $12 respectively. We'll see. How about wheat? Chicago wheat, that's down 1 1/4 overnight to 601 in the May. We're 2 cents lower in the D's to 660 and a quarter. All right, so we're off between 1 1/4 and 2 cents when it comes to the wheat in Chicago. If we go to the hard red in Kansas City, that's up about a penny and a bit. May's up a penny to 633. All right, not bad, but we have closer to the high, penny and 3/4 away from the high of the day there. But if you go out to the D, sets up a penny and 3/4 there to 672 and a half, and that's 2 cents off the high there. How about spring wheat? What did that do overnight? That's up 2.5 cents in the May to 693 and a half, but we're down a penny in the July. That's kind of I'm going to call that mixed. It really doesn't know what it wants to do. 697 and a quarter is last in July. That's down a penny overnight. And then cotton, I think this was quiet too. We've got a 49-point gain in the May to 80.07, and we got the D down 12 points to 77.52. So there you go. That's what's happening in cotton. Let's bring in our guest analyst who's going to start the day off with us, get us going in the right direction. That's Brian Hoops. He's the president of Midwest Market Solutions. Good morning, Brian.
Good morning, sir.
Yesterday was an interesting one. Not as much, I guess, for the grains and livestock as it was for the outside markets, but it could ultimately affect us. What are your thoughts here opening up us markets on a Friday morning?
Yeah, so you don't have a lot of movement in the grains overnight. You have wheat doing its thing again this week with Chicago losing to Kansas City. The crop ratings on Monday saw a 25-year high in crop ratings for soft red wheat. So it makes sense that Kansas City would gain against Chicago. But there's been a lot of rains overnight and more this weekend for the Tulsa area. They're just getting pounded with rain this morning. Wichita is going to get some rain. Those are some dry areas of that hard red wheat belt and into Missouri. And we've kind of erased the deficit just overnight, 4 or 5 inches in central Missouri. And there's a lot of wheat planted there, a lot of corn, a lot of soybeans. And so it's going to help those crops a lot. So I look ahead into Monday's crop progress report. I think we're going to show good planting progress for corn and soybeans this week. But then after that, we may slow down quite a bit. And I don't think it's going to be viewed by the market anyway that, any planting delays are inevitable. We're going to get the crop in the ground, but it might be a little bit of supportive feature. So it gives us an opportunity here, along with too much rain during the harvest season in Argentina, to see a little strength in corn and soybeans during that planting time frame, which is a perfect time frame to get yourself some minimum price put options and protect the downside. And if we do go higher into the summer for some reason, you have an opportunity to roll those protection levels to a better price.
Well, in the short term, planting delays might be seen to be, lack of sellers, so you could see us drift a little higher on that. But in the long term, everybody loves that drink, right? Everybody loves that water, and
Right.
that can't be a bad thing in the long term, right?
Right. It has to be viewed beneficially for the long-term perspective. Maybe the short term, it gives us, replant in some areas or planting delays, but those are just kind of small bumps in here that you need to take advantage of. In the case of wheat, there's not a lot of selling that's stopping that rally. But I think in the case of corn and soybeans, there's a lot of farmers holding corn and soybeans that's going to slow or stop rally attempts, especially in that old crop. We heard some rumors that Brazil bought cargoes China, bought cargoes from Brazil of soybeans, 5 to 6 cargoes yesterday. They're going to snub the U.S. and buy cheaper Brazilian soybeans at this time, especially on price breaks. So that adds to a little bit of a negative tone for those markets when you see demand starting to soften just a little bit. So yeah, wheat doesn't have many sellers on this rally. I'm afraid if we see more of a rally, there's going to be a lot of sellers of corn and soybeans.
Yeah, and that's what it feels like too. Like maybe the beans and corn getting drug up with the wheat, that might be getting a little long in the tooth.
Yeah, I think so. We saw corn kind of diverge itself from the wheat market the other day. Yesterday, it seemed to kind of follow it again. But, can we get above 480 on the December futures? Well, we've gotten to 477, 478 area. We can't get 480 or above, which probably tells you need to be doing something at these resistance points.
There's got to be a stack of corn and beans for sale within 10 cents of $5 and $12, right?
You have to think so. Everybody's kind of talking about $5. If it gets there, they're going to do some selling. So usually that doesn't happen. Usually you get to 490 or 495, and we never get to where everybody's execution
exactly
point.
Right. All right. Stay right there. We need to go away. We're going to pay some bills. We're going to come back and talk more with Brian Oops, Midwest Market Solutions. We'll be right back after this. All right, let's review what live cattle did yesterday. We got our guest analyst point of view, what it might do today. You heard what our anchor here, Christina, had to say about what Colombia has put forth. Let's see what we've got going on. All right, let's review. Yesterday, live cattle were higher. We go to the June. It was up $2.55 to 177.80. That $2.05 rally in the Oct to 179.70. That was a good board yesterday for the live cattle. Feeders were higher, but not as much. But we'll take a look at May. It was up $2.15 to 246.25. Not too bad, right? About 40 cents off the high. $1.92 better in the SEP to 259.42. And then finally, lean hogs. They didn't get the memo yesterday. That mailbox was run over by a planter. May was down $2.07 to 95.27. Then July was off $2.05 to 107.80. Let's bring back in Mr. Brian Hoops, Midwest Market Solutions. Brian, they're not that big, but it's just that sentiment trade that I don't like with Colombia pulling what they've just pulled. What do you think?
Yeah, I think you're right as well. There's a lot of moving pieces in the marketplace and the world place as well. So, yeah, you're going to have to protect yourself, I think, this year as a farmer. So, we could overproduce in the grains once again this year without any type of a weather threat, and that means lower prices. You look at the livestock, we're producing heavier cattle. We're going to have more on feed at least for the first, next 3-4 months, and you do have to protect yourself. They're a really volatile market, as you saw yesterday. We were down a couple dollars early, rallied a couple dollars, dropped again, and then finally rallied into the close, a couple dollar gains. It was a wild ride. Cash trade is coming in pretty much steady in the Southern Plains at 182, but we are seeing gains on a dress basis at 294. That's $2 higher than the previous week. And we're also hearing very strong sales of feeder calves, especially in the northern areas, and that made that feeder cattle index jump about $2.50 yesterday. So while you look at what's happening in that cattle market, a lot of strength in the northern dress trade, and I think you have to use strength, especially a major rally in the June contract, maybe up in the 180 area as a pivot point to try and really start to get hedged if you haven't already.
Yeah, because you're one headline away from having a problem, right?
Yeah. Well, we've had some headlines that have given us problems.
Absolutely.
With the bird flu and maybe not transporting animals across state lines. So you're just one or two of these headlines away from another down hard move in the market, and then it kind of gets down to, do the funds step in and just abandon ship on their long side, and what we saw last September, October, November, we don't want to happen again, of course.
Right, I agree. All right, great stuff. Thanks for opening us up. Great content as usual. Have a great weekend, by the way. Brian Hoops, Midwest Market Solutions.